I have been researching these issues for CCA for the past 4 years. I wanted to put this brief overview together to help fellow board members get up to speed on the issues and perhaps assist our attorney as he prepares his arguments for the court. The full CCA complaint was filed 2.5 years ago. At the preliminary hearing in September 2019, I was asked to show that the beach did not have excess demand for sheriff and EMS coverage, thus not needing OT funds going forward. A few weeks ago, Judge Hunter mediated our dispute with the county, but to no avail. Today's motion is focused on the $30 million of OT spent for sheriff and emergency general county services. This is the single largest OT investment the county has made, allegedly to attract tourists. We cite 3 points to make our case. The county has ignored the changes in purposes made to their law in 2004. These general government services cannot reasonably be considered as tourist attraction. The county abused its discretion in the processes it used to make these judgments. Let's take a quick look at the legal history. The county's original OT law was passed in 1987. The 1987 law focused on general government tourist purposes: government buildings, trash pickup, and sheriff and emergency service. OT not used on this could be transferred to the general fund for other general use.
These are general government functions carried out throughout the county as part of government's normal responsibilities to property owners and residents in return for their payments of general tax revenues. The coalition points out that although early OT laws allowed this, it is clear that tourism also generates significant extra general tax revenues. For example, in Currituck, of the $12 million in sales tax paid just on rentals, the county's share of that is between $3 and $4 million a year.
The North Carolina Travel and Tourism Coalition has worked with our legislature for 30 years to protect the investments of the state's tourism industry. Currituck's beach tourism industry has invested more than $3 billion in real estate alone. The coalition's affidavit notes, occupancy tax increases costs and actually hurts the local tourism industry unless the proceeds were invested to make the area more attractive. The legislature began to impose new guidelines to help the tourism industry. As new bills were introduced or old bills updated, these guidelines were applied. Tourism development authorities were established, largely representing the tourist industry. Tourism-related and tourism promotion were the only two allowed uses. Tourism-related uses gave a bit of discretion to authorities, but the tourism development uses had to be designed to increase the use of lodging and other tourism facilities by attracting tourists. Today, 130 other tourism authorities in the state now adhere to this TRE standard and do not use tourism-related for general government purpose. In 2004, Currituck's law was updated. The year before, Hurricane Isabel had damaged their beaches. The county wanted to increase its OT tax rate and allow use for beach nourishment. The tax increase was granted, but the purposes of use were changed to the new standards. The old tourist-related general government purposes were removed. As was the authorization to to transfer money into the general fund for general use. The new law raised the tax rate by 50%, adding more than $50 million extra to the total OT revenues collected since then. The county was allowed to keep a small amount for administration. A tourism development authority was established to plan the spending. Tourism promotion and tourism-related spending were the only two uses allowed. The tourism-related authorization requirement is common to 130 other tourism authorities. However, all other authorities have a majority of tourism industry reps. In Currituck, it is the Board of Commissioners alone that makes these judgments, but they still must be designed to increase the use of lodging and other tourism facilities by attracting tourists and business travelers. Thus, 130 tourism authorities in the state may be affected by the court's ruling. So what happened after the new law went into effect?
The county raised the tax rate, of course, but audit reports show that the $27 million of OT revenue still went into the general fund, where the actual uses are less clear. Only 40% went to the two tourism development uses, less than that for the other uses shown in the table. $7.8 million went to Parks and Rec, that we found out later was mostly for the YMCA in Maple. The $2.3 million for general purposes was more than enough to cover sheriff and EMS. The county clearly showed it did understand the change in purposes when they tried to change the law back, but keep the extra money. This is a 2007 letter request, but we had to go to the House legislative website to find the actual bill. They wanted to keep the money, but eliminate tourism development spending and restore the old tourist-related general government purposes, including sheriff and emergency services. The bill was referred to the Finance Committee, where it died. A year later, they tried to change the law again. This draft bill was provided through discovery. They wanted to restrict tourism development spending to 75% and allow the rest to go to the general fund for general purposes. The state's legislative website shows that Representative Owens didn't even bother to file it for Finance Committee review.
Finally, years later, a separate tourism development fund was established. The audit reports now provide greater insight into the actual uses of the funds. The two authorized uses are clearly marked, but a third use was identified by the author: transfers to other county funds for other financing uses. Examining all the audit reports since then and the current budget shows how the money was spent. Tourism promotions received about a third of the money. Tourism related, supposed to receive 2/3, got only 20%. And it was used for things like lifeguards, the Whalehead Club, beach accesses, wild horse funds. But the bulk of the money was transferred to county general funds. Most of these transfers are challenged in our full complaint, but the focus of this motion is the $30 million spent in general government public safety services, the county's single largest investment to attract tourists. Let's quickly summarize our motion. We make 3 arguments that this spending was illegal. The law changed the purposes from tourist services to tourism development. General government services cannot reasonably be judged as tourist attractions. The county's process for making these judgments was flawed enough to represent an abuse of discretion. In our brief, we provide case law defining how legislation like this is to be interpreted. The title signals intent. The language is explicit. The coalition agrees. The 2004 changed the purposes. As a clear matter of statutory interpretation, the title makes it clear. Tourist-related government purposes previously authorized was deleted, and the use of the general fund for general purposes was removed. The coalition strongly agrees that this use violates legislative language and intent. Our second point is that these general services cannot reasonably be judged to be tourist attractions. It's just not common sense. It's not part of competitive advertising. Sure, poor service might be a deterrent, but no, adequate ones are not attractions. The coalition agrees.
The county tries to make the case that sheriff and EMS are just like lifeguards, but lifeguards aren't general government services. They're provided only at the beach and paid out of occupancy tax. They use professionals that are certified in life-saving with plenty of training to handle the situation. Lifeguards add to the attractiveness of the beach, especially for our family tourists. However, certain promotional events, such as the 4th of July fireworks, might require support from sheriff and emergency services, but this should be as part of the cost paid from tourism promotion budget.
Our third point is abuse of discretion. This argument is fundamentally fact-based, so the county can take issue with any of our points. But at this hearing, the county must indicate to the court that they have tangible evidence that, if shown at trial, could prove us wrong. I feel that we need to lay out all of our arguments before the judge now to give him a better understanding of how blind the county has been on this issue.
Our brief discusses case law that defines limits to discretionary judgments. The individual decision makers need to understand the law and its proper interpretation. They need to be provided with the material facts surrounding a decision. As a group, they need to carefully consider and discuss these facts. Their decision needs to be made with a good faith rationale that is aligned with the law, and that decision needs to be absent ulterior motive. Based on these legal criteria, we identified facts in 5 areas that we believe support our claim that the county has abused its discretion. First, the individuals, commissioners, in their deposition testimony and public statements show a lack of understanding of the legal requirements. There's a lot of evidence showing they mistakenly relied on the county manager who helped define legal authorizations. The board as a group failed to publicly consider the legal definition of TRE and have the information available to it to determine its proper use for government services. There's a clear lack of due diligence in appropriating OT for public safety, and there may have been an ulterior motive to help OT to balance general budget.
As individuals, commissioners showed a lack of understanding of the new law's requirements. One board member even argued that nothing had changed. The depositions of 5 current board members show a wide variety of misunderstanding, as do many email records of exchanges that show embarrassing discussions such as this one.
Perhaps some of this confusion is tied to the fact that they relied on the county manager to define what was legal. 5 years have Board of Commissioner meeting videos showed these examples. Previous boards had approved this. You have broad latitude. It's not just for tourism. If you vote to approve it, it'll be legal. And the auditor never said our spending was illegal, even though, as an accountant himself, he understood the limitations to what the audit reports say. And all this time, the county attorney was silent. Our third point is that the board as a group was not given factual information on these issues, nor did they openly discuss the legal definition of TRE as it applied to them. Our team found nothing in mountains of material that we reviewed. The county's argument that they discussed all this in work sessions is implausible. Although there are no minutes or videos of work sessions, any documents shown to the board there should have been turned over in discovery. Certainly, we heard no such deliberations in the work sessions that we did attend. Lastly, 3 recorded last-minute board meeting amendments show no TRE consideration.
Our fourth point is covered in 3 areas where they demonstrated a lack of due diligence in their appropriations. Videos since 2015 show the county managers falsely justifying full-year budget amounts as additional cost just for the summer, specifically not full-year costs. The data table to the right is a compilation of audit report data to approve budget items and defense provided information on the actual cost. This was the table we used in all depositions and confirmed by the finance director. The county managers knew or should have known that the amounts they proposed were at or above full-year costs, but they chose to represent them as just for the summer. But no commissioner questioned these amounts before voting yes. As noted in our affidavit, another example of lack of due diligence surfaced when, during depositions, board members were shown this data and asked to compare the budgets they approved versus what the actual costs were. As shown in the graph on the left, in 2018, the EMS budget jumped by $400,000 and stayed at the $1.6 million level, the red line. But the county data shows the actual costs dropped significantly, and in their depositions, the county commissioners could not explain how the extra millions of dollars they approved for transfer to the general fund may have actually been spent. Meeting videos show that the commissioners used a false rationale to justify spending. They claimed that rental homes in the beach tourist area created a greater demand than residential homes elsewhere in the county, and thus OT should pay the extra cost. Well, even if this were true, we hold it would not be a justification under the new law, but it is actually false. As we discussed over Exhibit E at the preliminary injunction hearing, had they looked at call data, they would have seen that for both sheriff and EMS, although the number of beach calls do increase during the season, they never rise to the level per home as in the residential areas. Even during the peak months when there are more than 50,000 tourists at the beach has only half the calls for service as the 26,000 residents in the rest of the county. But no commissioner questioned this false rationale before approving.
Commissioner White, in his public statements and in his affidavit, fails to acknowledge the general government responsibility of the county to protect life and property throughout the county paid by property tax. His affidavit does note that to do this year-round requires a dedicated team to ensure quick response and backup if needed. The data shows the 16 to 18 full-time staff assigned to the Corolla Outer Banks is still less than what is needed for a similar number of residential homes in Moyock.
Our fifth point under abuse of discretion is that the board had an inherent conflict due to their dual roles, and this may have created an ulterior motive. They were the only tourism authority in the state that did not have any tourism representation. All the others have a majority from the tourist industry. But as tourism development authority members, they knew that they must develop tourism. But as county commissioners, they must have a balanced budget by law. It is clear from the record that the commissioners understood the property tax impact of using OT to pay for general services. Both emails and deposition testimony confirm this understanding. Email records show that they understood the issue. With the Currituck rate at 48 cents, such an increase would be politically sensitive. Deposition testimony indicates at least some current board members clearly understood this as well. Let me briefly summarize what you have seen. Our brief and affidavits have made our case. The law and the purposes therein were changed. There's no reasonable judgment that these are tourist attractions, and the county abused its discretion. The county needs to refute each of our 3 points in order to prevail. They need to show that the law really wasn't changed. They need to show that reasonable people would conclude that adequate public safety attracts tourists. And they would need to show that the board consistently exercised due care and diligence in their judgments. We ask the court to provide a clear construction of the new law, clarifying that authorization for these types of general government services has been removed. We ask the court to enjoin the county from future use for these purposes, and we ask the court to require that the county return the $30 million of misspent funds to the Tourism Development Authority unless the parties can agree to a consent agreement covering the remaining issues in our original complaint.